What's up guys? Today I'm going to share my top 5 stocks to buy in the month of January 2022. I spent hours of research going over hundreds of different companies and I found a few that I believe to have huge growth potential this month. Be sure to watch this video all the way through as I'll be giving my full analysis on each of these stocks and I'll be covering relevant news, significant numbers, price action of the stock, and my price predictions. As a disclaimer, I am not a financial advisor and my stock picks are not financial advice. This video is for entertainment purposes only and this is simply a compilation of stocks that I believe will do well in the coming months based on my research. As always, make sure to do your own due diligence before investing your money. Anyways, before we get started, please do me a favor and hit that like button, and if you're new to the channel, consider subscribing as well. I post weekly videos from my top stock picks to teaching you how to read stock charts to my trading strategies. You won't want to miss out on any of these videos, so make sure you turn on that notification bell as well. So without further ado, let's get into my top 5 stocks for January. So first up, we have Alcoa Corporation, or stock ticker AA. This is an aluminum mining stock. According to the CEO of Alcoa, William Oplinger, aluminum is a big part of the solution to decarbonize the world and is used where strength and lightweight applications are needed. He goes on to stress the importance of aluminum in EVs, where he says that there is about 100 kilograms of more aluminum used in EVs compared to an internal combustion engine vehicle. A research analyst revealed that aluminum is their favorite commodity pick, with positive demand aspects for lightweighting and packaging combined with potential severe limits on supply. Further Chinese enforcement of curbs on aluminum smelting capacity this coming year to reduce carbon emissions can contribute to a massive rally in the aluminum industry. The resulting higher prices have already transformed the company's balance sheet. We've seen margins increase from 20% in the first quarter of 2021 to 24% in the second quarter to 25% in the third quarter. They also have a projected massive increase in revenue for the fourth quarter of 2021. They have a PE ratio of 2.3 and an EV to EBITDA of 4.3. The beta is 2.4 and their 52-week high is $60.59 and the 52-week low is $17.30. Price action is currently sitting at around $60 on the day chart. We can see that it has been trading in this zone between $45 and $52 for several months but has recently broken out. I'd be looking to buy shares now, or you can also wait for it to pull back to $52 before scaling into your position. Analysts have Alcoa as a strong buy with a high price target of $66. Now, with management also initiating Alcoa's first ever dividend in October in what can be seen as an affirmation of Alcoa's financial fortitude, the stock looks like the kind that can continue to rally during 2022. So my next stock is Truist Financial, or stock ticker TFC. Truist was formed by the recent merger of banks BB&T and SunTrust. The merger created the 6th largest bank holding company in the US. This merger will provide the resources to accelerate investments in transformative technologies. This merger should also lead to significant revenue and more diversification as each bank is able to sell its respective products and services. Once they're fully integrated, we expect Truist to generate high returns on equity, allowing for a higher valuation multiple on price to book, or PB basis. This merger integration has been managed by BB&T Chief Executive Kelly King, who has executed numerous integrations over his career, so we know that this is being executed by experienced hands. Coming over to the income statement, we can see that Truist Financial has increased their total revenue year over year. Now, earnings from the integration should act as an engine for earnings growth despite factors such as low interest rates and slower economic growth. Looking at the stats, we can see that market cap is around $79 billion, the PB ratio is 1.27, and the beta is 1.21. Its 52-week high is $65.42 and the low is $46.71. Coming over to the charts, we can see that TFC is sitting at an attractive price level just north of the 200-day moving average, which can act as a strong level of support. We can see that ever since June, price action bounced several times off the 200 EMA before rallying up. Price analysts have TFC as a moderate buy with a high price target of 76. Now, I would recommend buying anywhere between $54 and $60 with a price target of $80. I would give this stock about a year to make its move since this is a cheaper stock, this is also a slower mover, and be sure to give it time. Now, my next top stock to buy in 2022 is Public Storage, or stock ticker PSA. Self-storage has a history of performing really well, not just during 2021, but over the past several decades. It actually has outperformed all other commercial real estate asset classes over the past 26 years. Public Storage currently has 2,678 facilities in the United States and interest in about 247 units in Europe. Share prices at the beginning of 2021 have gone from $220 to $375 and proved to be a steady gainer despite high market volatility this year. Also, this is a dividend stock yielding a dividend of 2.15% or $8. Now, if you watch my free comprehensive beginner guide video to investing in the stock market, you know how much I like to diversify my portfolio with a few proven dividend stocks. I'm putting the link to the video right up above, and I highly recommend it if you are new to the stock market and are interested in a step-by-step guide on how to not only get started with investing, but also to make smart investments with good returns on your money. So coming over to the income statement, we can see steady increases in revenue year over year, with revenue in 2021 at around $3.2 billion. Also, I love these margins, which are well above our sweet spot of 40%. Now, I go in depth on what are my favorite indicators to look for to assess a company in my beginner's guide, but long story short, margin is an indicator of profitability. To find margin, we will divide the gross profit by total revenue to see how much profit the company is making in comparison to their total revenue. The higher the percentage above 40%, the more profitable the company is. So to calculate 2020's margin, for example, we divide 2,047,606,000 by 2,915,068,000 to get a margin of about 70%. Coming over to the balance sheet, I like seeing that total assets has increased year over year. Next, we'll look at several key statistics, and the first one I like to look at is the price to book ratio. This number is around our sweet spot of 10, so I like it especially for a long-term investment. I also like seeing an increasing multiple on these earnings, as we've seen a quarterly increase from 8.4 in the fourth quarter of 2020 to 12.2 in the fourth quarter of 2021. Also, we can see the EV to EBITDA is 28.9 and the beta is 0.21. This beta of 0.21 indicates that this is a safer stock. Coming over to the day chart, we can see that price has been rocketing up since early October. Given that RSI is overbought and the price is high, I'd be looking to buy shares when it comes down to touch this area between 325 and 337. Now, analysts have PSA as a moderate buy with a high price target of 400 and an average price target around its current price. I'd wait for price to enter our buy zone and then buy shares with the expectation of rapid growth throughout 2022, not to mention that it is a solid dividend stock as well. My next stock pick is MGM Resorts International, or stock ticker MGM. This is a play based on my anticipation of the hospitality sector benefiting from global economies adjusting to realities concerning COVID, and as outlook concerning the disease continues to improve. Personally, I'm holding this long term, and I have been adding to Omicron-induced weakness in performance of this stock. Winters are usually rough in terms of increased prevalence of contagious respiratory diseases, but as we come to the end of winter in a few months, we should see the hospitality sector start to boom again. MGM is already a giant in the hospitality and entertainment industry, and I believe that this could be one of the leaders when the hospitality sector blows up. Stock price has risen steadily, going from around $29 at the beginning of the year to about $45. Coming over to the income statement, we can see that their total revenue took a hit in 2020 as a result of the pandemic, but revenue has been increasing, and I fully expect that 2022 revenues will mirror those pre-pandemic. Margins jumped from 33% in 2020 to 46% in 2021, which indicates greater profitability as the economy and the housing sector specifically has begun its recovery. Coming over to the balance sheet, we can see steady increases in the total number of assets. We can see here that the price to book ratio is an insanely attractive 2.84, while EV to EBITDA is 14.21. The beta is 2.39, which indicates higher riskiness compared to the market. Looking at the daily chart, price is at an attractive position, and if you want to invest in MGM, I would look to start scaling into your position now. Like I mentioned earlier, I've been adding to my position on Omicron-induced weakness in price, so if price decides to head lower, I'd buy it around $42 at the 200 EMA, which has held as a very strong support level many times in the past. Analysts have MGM as a moderate buy with a high price target of $68 and an average price target of $53.82. Last on my list is Goldman Sachs Group, or stock ticker GS. Goldman Sachs is a leading global investment banking and securities firm with three businesses, which are investment banking, trading and principal investments, and asset management and security services. Now, its CEO, David Solomon, is an owner-operator, which means that he has a vested interest in the company. In my investor's guide, I talked about how important owner-operators are and that they own a piece of stake in the company, which incentivizes them to grow their money in the company. We saw the price at the beginning of 2021 go from about $265 to around $380 at the end of the year. This is another dividend stock as they yield 2.08% or $8. Total revenue has increased, with it growing from $44 billion in 2020 to $58 billion in 2021. We also have a margin of 51%, which indicates high profitability. Coming over to the balance sheet, we can see massive yearly growth in the amount of total assets. We have a PE ratio of 6.44 and a PB ratio of 1.35. The beta is 1.5. Looking at the daily chart, we can see that Goldman Sachs is on a downtrend as shown in light green, with price currently sitting at around $380. I'm seeing our next level of support at $373, which has functioned as a solid area of support during the last several months. This line is also around the 200 EMA, which is a strong form of support. Now, if price continues to fall, we could see it bounce off of this area of support at $350. Within the next several days, price could fall to our first attractive buy zone at $373. Also, we can see that this level at 35.71 acting as a strong level of support on the RSI, and we can see it bounce around here. If this is a stock that you'd like to take a position in, I'd recommend scaling it now and adding to your position when it breaks this downtrend line in green. Also, feel free to copy my lines of support and resistance and create notifications on your charting software for various buy-in areas. Analysts have Goldman Sachs as a strong buy with a high price target of $576 and an average price target of $467, which would indicate a significant return based on the stock's current price. So those are my top stocks for the month of January. As always, remember to do your own due diligence on the stocks that I mentioned here. I've got a lot of faith in each of these stocks to do really well in the coming months, but that doesn't replace doing your own research on them to determine if they are the right investment for you. Also, if you haven't signed up for a Robinhood account already, go ahead and click on the link in the description below to claim your free stock. Ultimately, it's a win-win because you'll not only be supporting me and enable me to create more videos just like this for you, but you'll also get a free share of stock as well. Now, if you haven't already done so, please hit that like button and subscribe to the channel, and don't forget to tap that bell to get notified when I post a new video. Also, be sure to follow my Instagram at TraderIsaacs as I post daily stock market tips, tricks, and trivia on there. Anyways, thank you so much for watching and happy investing. Peace.